You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everybody. Welcome back to the Infinite Banking Mastery Podcast. Before I get into today's message, I thought I would share a fun fact that as this podcast is rolling out today, I will actually be in Orlando at the annual Infinite Banking Think Tank. I was incredibly honored to be asked to present on stage at this year's Think Tank. And so that's what I'll be doing today. And hopefully we'll come back with some nuggets of information to share from the other presenters. Anyhow, back to the podcast. Today I wanted to talk to you and share with you about how to borrow against your life insurance policy. Now, life insurance policies are generally seen as a safety net for your loved ones in the event of your untimely demise. And of course, this is very, very important. However, those of you looking into the infinite banking concept are likely most interested in the financial tool that it can be during your lifetime. So let's talk about borrowing. As I'm sure many of you, most of you, or maybe all of you know by now, life insurance loans allow policyholders to borrow money against the cash value of their life insurance policy. This is only available with whole life or universal life insurance policies, as these types of policies accumulate cash value over time. Whereas term life insurance policies, if you didn't know, do not have or build cash at all. Therefore, they cannot be borrowed against. I'm also quite sure that most of you know what cash value is. It is a tax-deferred savings component of your life insurance policy that grows over time. It accumulates through a portion of your premium payments and earns interest or investment returns if it's a variable universal life policy, which is not at all recommended for IBC. And if you have a whole life policy with a mutual life insurance company, it will also pay you dividends. Now, let's talk about the steps to borrowing against your life insurance policy. So the first thing, of course, that you'll need to know is that you have available cash value and that it's eligible for loans. If you're not sure what you have or if you can borrow against your policy, you should contact your agent to review your policy documents or the type of policy that you have, or else you can contact your insurance provider to understand the terms and conditions of the policy, or you can contact a different advisor or an IBC practitioner for a review of what you have, and I'm sure they can help you figure out the type of policy that you have and let you know if there's cash value and direct you as to how to find that out. Next, in order to know how much cash value you have available to borrow, especially if you want to borrow the maximum amount available and are not sure what that amount is, you could contact your agent to ask the amount you have available, or else you can contact the company to ask. Another way to figure out approximately how much you have available to borrow is to take about 95% of the net cash value that you can see on your account page online. That is, if you have created an online account. I believe this is possible with most insurance companies setting up an online account, but maybe not all companies. And side note, one thing to keep in mind about life insurance companies in general is that they are very slow to make updates, or basically to get with the times. They move like the tortoise. For example, my primary company just rolled out the ability to request loans yourself online. However, unfortunately, this is not yet the smoothest process. And just a year ago, this wasn't possible at all. Since it's not a smooth process yet, we are still happy to process those loans for you and make sure it gets done correctly and timely. However, soon enough, I'm sure this will be the primary way that you request loans from all or most companies. Some companies are slower than others, and some companies are faster than others when it comes to the technology and the online abilities. It just depends. And I want to add that Although I said to take about 95% of the cash value you see online to be your available loan value, I really should say to consider more like 90% to be on the safer side. Most often it's closer to 95%, which is why I said that, but don't hold me to it. It could be a different amount than that, more like 90, 92%, somewhere in that range. And if you're expecting a statement in the mail that will break all this down for you, it's important to know that life insurance companies only send statements once a year. They will not be sending you a regular statement, either monthly or quarterly, that shows your net cash value and definitely not your maximum loan available. You also won't be able to see your maximum loan available online, at least not with any company that I work with. It's important to remember as well that although there are insurance companies that are supportive of IBC, to the underwriters, the client service department, and pretty much everybody who works there, the primary purpose of a life insurance policy is still the life insurance. They are not focused on all we want to do with the policies or servicing constant loan requests. You are in control of the policy and can borrow against it for whatever you want and be in absolute control of your loan repayment, and the company will accommodate what you want to do. But to them, the main purpose is still life insurance. Okay, so now you know your available loan balance and are ready to request your loan, either by contacting the company yourself, contacting your agent for help, or attempting online service. Keep in mind that there may be a maximum you are able to request over the phone without having to sign paperwork. Well, oftentimes if you're doing the online request, you'll have to submit paperwork. With my primary company, that maximum is $25,000 before they will require loan documents to be signed. Now, these can generally be e-signed, at least with every company I'm aware of, but they still may require signature on documents. Anyhow, the next thing you'll want to be sure of is what your interest rate is with a company. I would say that you are likely to already know the interest rate that your insurance company will be charging you for the loan, especially if your company only offers a fixed interest rate. My primary company allows for you to switch back and forth from fixed to variable, which is a very unique feature. But knowing this rate will be helpful when you're figuring out how best to pay yourself back for the funds that you borrow. Remember that Nelson Nash always advised to pay yourself back more interest than the insurance company is charging as a way to further grow your banking system. And if you're just realizing for the first time that the insurance company does in fact charge interest, and this whole time you thought that all the interest you were paying back was going 100% to you, this is a conversation I would be happy to explain further with the use of calculators. We have some visuals to help you understand how you are still most definitely winning. Concept to understand, yet but makes perfect sense once I'm able to fully describe it to you. And if you think about it, of course you want your insurance company to be profitable because you are now part owner of that insurance company if you're working with a mutual life insurance company. The insurance company either has to be doing something with the money to earn interest, or else you are borrowing it and paying interest. That interest comes back to you in the form of dividends when your company is profitable. And the companies that we work with have very strong dividend histories, my primary company having never missed a dividend in over 130 years. So you want a company that is going to be strong even when times are bad in the economy and in the nation. Anyhow, each insurance company may have different terms regarding the interest rate, repayment schedule, and maximum loan amount. It's important to understand these details before proceeding. And now that you're ready to go, you have all the info, you can request your loan. You don't have to apply for the loan, you simply request the funds. Since you are borrowing against your own asset, you don't have to go through any kind of lengthy process. Simply ask, and boom, you receive your funds. Now, I would say the most common amount of time you'll have to wait to receive the funds into your actual bank account is anywhere from 3 to 5 business days. Sometimes the funds come super fast, and sometimes they take a little bit longer. What is affecting how long it takes has a lot to do with how many service reps there are working at the time and how many people are requesting a loan at the same time as you. There was a period of time, maybe a year or so back, where a lot of insurance companies were struggling to get employees to fill those roles, the client service roles, and so they were shorthanded. But aside from sometimes being shorthanded, this brings me back to how insurance companies are not thinking of your policy as a banking asset, but instead life insurance. They are not expecting to have everyone requesting a loan every month or all the time. They are not thinking, oh yes, this is a financing tool that most clients will be using instead of banks. Therefore, they aren't prepared like a bank. So because of this, if a huge wave of people request loans at the same time, it can slow them down a bit. Sometimes they come back and say it could take 5 to 7 business days or 10 to 12. However, most commonly, it's 3 to 5 days. This is just something you should be aware of so that you can plan ahead as much as possible. And even though you may not love this about the process, remember that life insurance companies don't have a bunch of tellers or tons of client service reps that are just to be processing loans all day. And we don't want them to have to hire hundreds of new client reps just to process loans. If they did this, they would likely have to increase costs for policies. And this is one reason, as I've said before, that it's good to plan ahead for things you're going to want to borrow for, rather than, I'm going to borrow every 2 weeks or once a month. It's best to have less loans with larger amounts if you foresee the need that you're going to want to borrow against your policy for, rather than plan to take loans regularly. Even though you can request loans whenever you want. It's best not to plan to have to take money regularly and give the company a need for more service reps. Again, one of the primary benefits of borrowing against your life insurance is the ease of access to funds. Unlike traditional loans, there are no lengthy approval processes or credit checks involved. Life insurance loans typically have lower interest rates compared to personal loans or credit cards. And as I mentioned, the repayment terms are often flexible, allowing you to manage your financial obligations much more comfortably. In addition, when you pay back a life insurance loan, your full loan goes 100%, or your full loan repayment goes 100% to principal, making it the most efficient type of loan you could possibly have. Tax benefits. The funds you borrow against your life insurance policy are not considered taxable income. That is, unless you've MEC'd your contract. If you put too much cash or too much paid up additions into your life insurance contract and cause it to MEC, become a modified endowment contract, then even your loans will be taxable when you are borrowing against the earnings of the policy. That's why it's so important to keep your policy from becoming a MEC. This is why you want to be sure you're working with a knowledgeable IBC practitioner who is looking out for you, your policy, and building the policy in a safe way to keep it from becoming a modified endowment contract. Now, if you're feeling ready to partner with such an advisor and you would like to work with me, feel free to reach out to me at Valerie@alphaomegawealth.com. I've really enjoyed meeting with and working with podcast listeners, and I very much enjoy working with people who are actively trying to learn. I would love to meet you, learn your goals and concerns, and help you get started with IBC. Reach out to me if you're feeling ready. I otherwise hope you have a fabulous week, that you find joy in each moment, and that you make the most of each day. Thank you for listening. Thank you for sharing my podcast. Have a great week. Take care.
This is thepodcastfactory.com.